Good morning, everybody. Welcome to the Game Plan. My name is Gareth Soloway, Chief Market Strategist here at VerifiedInvesting.com. So we're going to cover all the details. There's a ton of earnings that have come out between yesterday's close and this morning's open. We're going to look at what the futures are doing, what the 10-year yield is doing, because we know that is a key component for the market action. And then we're also going to look forward into what else is going on, what could be major movers. We'll touch on Bitcoin, gold, silver, as well as oil and natural gas. All right, so let's walk over to the screen here and take a quick look at what is going on pre-market. What we're seeing is a market that is kind of neutral, right? So yes, we had those Google earnings, which were very, very good last night. We also had AMD, which was very, very bad. Those two are generally canceling each other out, at least for the time being. Now, you might say, well, AMD is only a tiny percentage of the market cap of Google. Why is AMD impacting the markets to negate the move by Google? The answer is simple. Because AMD's earnings affect the whole chip sector. That includes NVIDIA, it includes Broadcom, and all of these other players that have huge market caps. And so it's a whole sector that's getting influenced versus Google, which, yeah, it's influencing Meta platforms a little bit and a few others, but not to the extent the chip sector is getting influenced. All right. Economic news today, guys. ADP private sector jobs numbers coming in at 233,000. That is an amazingly strong number. Okay, so yesterday we had the JOLTS data. JOLTS is job openings. It came in very, very weak, meaning less job openings. But apparently that's because so many people have been hired in the last month. 233,000 beats the 110,000 expectation. So that is a strong number. So again, what that tells us is that even though the JOLTS number was weak, it doesn't tell us that the overall economy is weakening substantially yet. Granted, we do have the non-farm payrolls number on Friday, and of course I'll analyze that once we have the game plan on Friday morning. The other number that came in, this was a little weaker than expected, was GDP. Q3 GDP coming in at 2.8% versus 3% expected. But let's be fair, 2.8% is still very solid growth for the U.S. economy. All right, so when all is said and done, we're seeing kind of a mixed bag reaction here in the markets. Again, you can see, again, this is where we closed yesterday right here. All right, and this is what we were doing in the overnight kind of floating up. And then as we came into some of this economic data and morning earnings data, we started to see a little bit of a fade. But if you draw a trend line right across, we're essentially flat on the S&P 500. Now, don't forget, guys, so we got through the Alphabet earnings, the AMD earnings, but after the close today, we have Microsoft and Meta reporting amongst many other big names, and tomorrow, we also have jobless claims, more earnings from Apple and Amazon after the close, and Friday, the non-farm payrolls report. So this is a huge, huge next 24 to 48 hours for the markets. Now, I wanted to show you this. This is something that, again, I want to draw your attention to. It's very, very important. The markets have been getting nervous as rates have been going up, up, and up. And remember, the Federal Reserve cut rates by 50 basis points about a month and a half ago. But what did rates do? They went straight up instead of down. Now, again, what does that tell us? It tells us that when all is said and done, the Fed can try to guide rates, but they can't totally control rates. And that's very important to note. Really, if you think about who's ultimately the endgame controller of interest rates here in the U.S., it's those people that are buying the U.S. debt. Because if they say, hey, we're not going to buy your debt because we don't think we're going to get ever paid back on this debt unless you pay us 10% interest, guess where the interest rates would go? They'd go to 10%. All right, so the point being here, though, on a technical analysis basis, and you know that verified investing is all about the data. There's no hype. There's no nonsense. It is what it is. What we know is the yields had broken down from this bigger wedge pattern, and then we've seen a classic retrace to the scene of the crime right here, going right back to that level. You put in a little topping tail yesterday. That's a reversal signal per technical analysis. Today, we're basically flat on rates, but my expectation now is for rates to start coming down. Now, is it going to come down because all of a sudden we're going to get our debt under control and we're going to all of a sudden be really fiscally responsible? Not even close, guys. The reason it's going to come down, in my humble opinion, is because the economic data will, again, get weaker and weaker, which will draw it down just by the nature of it. Now, even if we go into a recession, will rates ever go back to, let's say, 2% or 1%? The answer is no, because the U.S. debt is way too high. There's no country that's going to loan us money at 2% interest rates. They're going to want higher rates because, again, our fiscal situation is getting worse and worse in the U.S. Okay, so that's where we are. And just a heads up, I did go long TLT. TLT, remember, TLT is the symbol on this ETF that basically is used to trade the yields, right? So when yields go down, like I'm expecting them to, the TLT should go up. It's kind of an inverse play that way. And that, again, I did pick up with members of smart money stocks and ETFs yesterday. All right, over here we go. Let's take a look at a couple other things here this morning. Just going back to the S&P 500. If we take a look here, this is your daily chart of the S&P. There hasn't been a lot that has changed as they walk back to the big screen here, is that for the most part, we're still hovering below this wedge pattern. And remember, as long as we're below the wedge pattern, the vulnerability remains that we could dip into this trend line, although that would then become major support. You would expect a pretty solid move back up off of that level. But again, the wedge pattern's been broken. The idea is a retrace to the former breakout major pivot high level. And again, at that point, we'll have to watch and see. Do we get the big move up to 6,000 on the S&P, 6,100? Or does it bounce a little bit and then roll over? And again, I don't know the answer to that. I'm waiting for more pieces of the puzzle to show. I know what this means. Just below this, it favors this. Past that, we don't know because we have to see what happens here at this level. Does he get a small bounce and then break? Does he get a big bounce? We'll get that information, and I'll relay it to you guys in a real-time basis in these game plans. All right. Let's go into some earnings news here, folks. So Google, obviously, / Alphabet, it is having a monstrous day if we look at the chart. Again, up about 6 to 7%, trading at around 180.35. If we go to your daily chart, the chart actually was bullish. And I talked about this yesterday in Trading the Close. As we walk back to this screen here, we can see that this was actually a bullish chart setup. And I talked about just before earnings were released, I said in the Trading the Close episode yesterday, I said, guys, this is a bullish setup. Now, you might say, well, why is this bullish? Well, just look at the pattern. You have this beautiful V bottom. You almost have an inverse head and shoulder pattern right here. That's bullish. Really, this can also be called a cup and handle pattern, right? So, again, the beauty of charts is they're not going to be absolute, right? No one should go into technical analysis and saying, hey, if I learn this, I'm going to be 100% perfect in trading. That's not reality. But the reality is that if you study this and you learn these, you will have an edge. And an edge in this game can mean millions of dollars in profits. And so the idea is this pattern, you can see, I mean, look at that bull flag of a cup and handle pattern forming, and then it's starting to break up. That's probably, by the way, this is probably insiders that start to understand that the earnings are going to be good. And then ultimately, where are we trading? We're trading right up in this range. Now, where is resistance going to be? I'm not even thinking about shorting this unless it gets up to this level here at this high pivot, and that's right around 192, give or take. So if it were to push up to 192, maybe 191, I would consider a little bit of a short trade. But at this point, this was a classic bullish pattern, and the earnings reiterated or gave us credence of why this pattern was telling us it was bullish, and it did push up quite nicely. All right, next up, let's take a look at AMD, which is the opposite side of the spectrum. If we look at the chart here, look at this move. I mean, just an absolute cratering. The stock is trading down, I think, about 7 or 8%, maybe even 9% at this point. Now, going to the daily chart, there's a couple things we want to focus on here. If we take a trend line and we say, okay, the stock, if we go back to the intraday, is trading around 153 right now, so 153. So the first thing that gets my attention is this gap fill right here. There's a gap down here that has not been filled. That's at 134. It's not going to get there today, at least if it does, that would be crazy. But then there's a level a little bit higher that I think is a day trade we should be watching very closely. The 148-ish level. So watch the 148 level today. That would be a pierce of this low. It would run some stops, then go right into this gap fill right here. All right, the other thing to keep an eye on here is you also have a trend line, an upsloping trend line right here, which also matches that same zone. So you're looking at 148, 147, a lot of technical support. Remember, when X marks the spot, meaning two trend lines converge, it's always going to be most likely better support than not. All right, Reddit here, guys. Amazing move on Reddit today. Absolutely rock star status move, up over 20%. Now, the kicker is this. A lot of people always ask me this, right? So if we get rid of these trend lines here and we just look at this chart, and let me go to the big board and talk about this. So this is a chart on Reddit where the stock closed at around 82 yesterday. It's trading above 100 today. This was where it IPO'd, right? So it IPO'd earlier this year. It had this crazy move, then a dip, and then it kind of went up here, had another dip. Now it's way in the stratosphere. Now the question is, well, how do you decide where to short? Like, if you don't have high pivots, double tops, trend lines up there, what do? Do you just guess? Do you just guess, close your eyes, and pray? No, that's never a good method for investing, folks, especially in the shorter term method. So what you're doing here is you have to say, okay, there's no specific level here because we're in uncharted territory trading up way up here in the 100+ range, but what you do start to look for is reversal signals on the candles, right? So if we got a daily topping tail, for instance, all right, so let's say we open at 100 today and we put in something like this with a long tail where it initially opens here, pushes up, rallies all the way up, let's say to 115, and then pulls back. That's a reversal signal. So you can get these signals still on charts. You just have to wait now. So there's no like, oh, let's short it here because here's a trend line or here's a double top or anything like that. There's nothing that I'm seeing at that point. That's okay. Then you can just keep an eye on it for the reversal signal that occurs and forms today. All right. So I just wanted to go over that because I think it's a common question for investors about, well, if this is in uncharted territory at all-time highs and way above any sort of trend lines, how do we trade it? And the answer is you have to be patient. You have to let the chart tell us when the opportunity is to go long or short. All right, next one, we got to look at Eli Lilly here. Look at this chart, guys. So again, if you've been following me on Eli Lilly, and that's just how powerful it is right behind me, but the idea being is that Eli Lilly has a drug. It's a weight loss drug. It's high margin. But the kicker is, anytime you have a high margin product, and anyone that's in business knows this, is that other people will see that and say, wow, they're making 30, 40, 50% margins on this. I have to get involved and come up with my own weight loss drug. And that's what's starting to happen. And so Eli Lilly is going to start to have to, and they're starting to have to lower their price point to kind of keep market share. This is stuff that I predicted. Literally 3-6 months ago, I talked about this happening with Eli Lilly. And now if we look at the chart, look at this chart, guys. Incredible drop here. $100 drop on Eli Lilly. You can see that trend line. The trend line that you saw in the intraday is this longer term uptrend. And right now it's at around 823 or so, 821 maybe. If we close and confirm below it, the uptrend is broken. All right, now the uptrend breaks, then sure, you'll get bounces, but you have to start looking for shorting into the rips versus buying the dips. Now, on a day trading basis, there's a big gap fill right here at 772 and a double bottom at 748. This would be a huge zone as a potential opportunity. Now, remember, this line would be good if we were trading above it and it was falling, but we're already below that line. So we're already in the vulnerable area where we could see a significant dip on Eli Lilly. Now, Caterpillar. Caterpillar's one where if we look at the daily chart here, you can see had this bigger parallel, and then again, we were coming right up here, kind of came in, and look, going into earnings, it broke down below this mini parallel. That signaled weakness going into earnings. All right, sure enough, what are we seeing here? Caterpillar is down. It's not down a ton, right? I mean, it closed yesterday around 388. It's trading at 378. We'll call it down about $10. At one point, it did flush, but it just shows you that, again, the charts can kind of give you a little inkling into what could end up happening. Now, on this chart, if we get to 370, there's going to be a support right around 371. For me, I'm going to probably play it a little more cautiously and look for 360, but there's a lot of technical supports, and the uptrend technically is still intact because you haven't taken out this parallel trend line here with this parallel up here. So again, this is just a smaller move down this morning on a big name stock. And again, should be paid attention to. It's in the Dow. It's one of the Dow components, but just something to keep an eye on there. All right, let's go on to Bitcoin here, guys. And Bitcoin, again, you can see all my annotations here on the charts. Let's even remove that one. Just keep it super simple. We talked about a little bit of a retrace and then a move up, and that's exactly what we've seen. Let's go over to the big board and take a look. So in terms of the chart on Bitcoin, the stock is still, I shouldn't say the stock, the crypto is still very, very strong. Now, it did tag double top. This is very usual or normal. So you have your double top from March at 74. It kissed 74 right here, and it's backed off. Now, in general, and I'm speaking from probabilities, what ends up happening? Well, there are people that are very nervous and saying, okay, it's getting close to double top. We know double tops are resistance, so I'm going to sell just underneath that. And there's a lot of people that do that. They take their profits. They say, okay, it's close enough. Get out, get out, get out, because I don't want to wait for it to hit, and then everyone else sells. And that brings price back down just a little bit. But the kicker is this. Generally, double tops are made when the second high, meaning this high, actually pierces. And then essentially the thought process and psychology dictates that you have a lot of stops that are right above that level from bearish positions, short positions. Those will get run, those will get taken out. And then when it gets above this line, what happens? So many people FOMO in. So they basically wipe out the bears, right, with the pierce, stop them out. Then anyone that was on the fence waiting to see if it breaks out, they get them in long by when it pushes above. And you know what happens? Usually the rug gets pulled at that point. All right, now listen, it doesn't mean long term. I'm just talking shorter term trading here, so please understand that. But we saw this in a weird way going back to 2021 in Bitcoin. Remember, in 2021 in Bitcoin, you got the move up to 65, the pullback to 30, the move up to 69. Remember, when it took out that high of 65, it stopped out the bears, right? All right, that's where the bears got stopped out because they're like, oh, crap, it broke the highs. Here it goes. And then on the other side, the bulls were like, okay, it broke 65. Now it's 100% going to 100,000. And the FOMO just kicked in. And then what happens? They pulled the rug. This happens so many times. These are, by the way, these are institutional secrets. Folks, this is stuff that, again, is based on psychology, based on track records of scanning charts, thousands and thousands and thousands of data points. This stuff happens. All right, now, the bigger question is it the institutional money that's pulling those tricks, or is it just human psychology that when it breaks the high, number one, people panic on the short side, they get out, so that's fair. And then on the other side, you get just the oh my God, it's breaking out, kind of rush into the trade. So it may not even be an institutional thing. This is just institutional knowledge. Got to understand the knowledge, folks. This will make a huge difference in your trading and investing and really controlling your emotions. And that's what technicals are all about, making decisions based off logic and essentially, logic and data type stuff. All right. By the way, one stock that I love on the short side is MSTR, MicroStrategies here. If we look at MicroStrategies pre-market, it is coming down here a little bit, so that's nice to see. But really, the thing I wanted to show you here on MicroStrategy is a beautiful parallel. And listen, people get so upset, oh, he's against Michael. No, I couldn't care less about Michael Saylor. I'm a trader, right? But look at this, all right, on the chart. When I see it, like, you could call this chart the ABC store or the XYZ store. It doesn't matter. I don't care. I don't care if it's Bitcoin or widgets or they sell turds on the street, frankly, right? I couldn't care less. It's trading the chart. And that's the problem that most investors have is they're so focused on, oh, but their technology, oh, but it's Bitcoin, oh, but it doesn't matter. Human psychology, it's the same. It's the same whether it's 3D printing or solar stocks when they ran crazy or marijuana stocks when they went nuts or Bitcoin stocks when they go nuts. It's all the same. Humans don't change. We don't change. The question is, can you adjust your mindset to understand that and therefore profit from it? That's the key. So anyways, beautiful little trade. I shorted this yesterday with members of Smart Money Stocks and ETFs. We're already in the money on this MicroStrategy short. All right, next up, let's go to gold here this morning. Gold trading up just ever so slightly here. Let me bring up my parallel lines. Again, we're just creeping above this little bit of a level here, so we'll see. Yesterday, I came to the epiphany that gold is probably going to stay strong until the elections. There's so much fear that there's going to be unrest one way or the other because it's so close, and even global instability, right? I mean, you know, are there going to be massive tariffs? Are there going to be this? I mean, there's so many things that people just are piling into gold. What that also tells me is that after the elections, assuming it's not a catastrophe situation, you actually could see a pullback. That might be when we get our pullback on gold. All right, silver real quick, guys. Touching base on silver. Silver's coming in, still underperforming even after its nice move recently. Oil, which just continues to look like you know what to me. I still think it goes to 65 before it hits any sort of major support. And then natural gas, guys. Natural gas, again, still no trade for me since our last trade in natural gas. It is pulling back more here. Again, this is my buy level. This up here, I'm not sure if I'd short it because it came so close. But if it does dip here, yeah, I would pick that up at that point in time. All right, guys. Listen, you guys are amazing. I appreciate your time every single day when you step up and watch the game plan. I really try to help you learn things and get insights and potential trading opportunities from these game plans. I do ask that you spread the word to your friends and family. I want to create a following here of people that want to know the truth. They want to know the non-narrative based data focus and what the high probability outcome is going to be, and really ignoring the social media nonsense, right? I mean, there's so much stuff that sways us as investors when we read all this stuff on social media, whether it's true or not, or is driven by ulterior motives. So that's the kicker, right? We want to be on the point. Let's make our decisions based on probability, almost like robots. Let's be like that. That's how you get great results in trading and investing. All right, I got to get to my trading room, guys. Thank you so much for tuning in. I'll be back with Trading Close today. Take care.